What's up? What's going on, guys? Give it a second here to, kick up, do its thing, not chill out. Things are always interesting, man. It's like a new experience every time. Jonathan. There we go. I think you might need to accept it on your end or something, but
There we go.
yeah, that worked pretty seamlessly, man. How are
Much easier than using the MacBook.
you?
Here in my office, no Lambos, no cool garage or anything, but here in the office.
Not even a bookshelf, eh?
You know what? The bookshelf's at home in the home office.
Awesome.
Yeah,
More
I got
accessible there.
more marketing and sales books than you know what to do with.
Right on. That's awesome. What's up, Sean? That's
Hey,
cool.
what's
So
going
it
on,
looks like
Sean?
we'll have a few people
Yep.
popping in. It looks like that's awesome. It's kind of a weird time of day to go because everybody's like either dinner or trying to get home right now.
Yeah, yep. But you know what? They'll catch it later, and I've had a lot of success, believe it or not, this time in some of the groups. Like it's not a bad time to go live. There. Here we're a little
Yeah,
obsessed
for
with the
sure.
white. You know, got one that I think I have a whiteboard in every office.
Yeah,
You know,
nice. It
so
helps. I got to start implementing more of that for myself.
yeah, I used to. I really like the paint that you can put on the wall. It's like that you can write on the writable paint. That stuff's great
Yeah,
for strategy
nice. Yeah, I
sessions.
can see that being handy too. Sweet,
Absolutely.
man. So, effectively or efficiently financing your business, what are you thinking? I mean, there's so many ways, there's so
Uh,
many options out there. It can be overwhelming for some of the newer people.
yeah, man, I agree. So just to touch on what you said, right? Not even talking about not even talking about what goes into how to do it. It's
Yeah,
first where to go, right? So you can go to your local bank, right? You go to a big bank, you go to a broker, or you go to a marketplace. I own Sprout Lending, which is a marketplace, and there's a lot of distinct differences
yeah.
between what each does and what their functions are, what their roles are, what's the advantage of one versus the other, you know. And I think a big thing that I've seen is that, when you're financing your business, you really have to know everything about your business, like what you're using the money for. That's going to make a big factor in what you choose to, where you choose to go, and ultimately
Mhm.
what you decide to do.
Yeah. Yeah, because the rates and stuff like that, they're pretty much the same across the board. You might find like a half a point difference, maybe a point, depending where you go, but
I
there's nothing
I,
really
I, I
crazy.
lost I lost you there because I was getting a call. So what did you say?
Oh,
The rates are the
I-
same across the board.
yeah, I was like the rates are pretty much the same. Like that doesn't affect it. It's like maybe you'll find a point difference on the extreme side, but like overall it's pretty flat, pretty consistent across the board, I think.
Well, it is for mortgages, right? When somebody has a secured thing, like there's not going to be a big
Mhm.
fluctuation in what a mortgage would be. But
Yeah.
between financing programs and between um, like how long the money is out and how qualified the borrower is, there's huge fluctuation.
Yeah.
Same guy
Looks like
buzzing in. I got to put this thing on airplane mode. If I put it on airplane mode, is it going to kill what we're doing?
no, it should leave the Wi-Fi on.
Okay, cool. Let's see. All right, we're good. All right, thank God, because my phone doesn't stop all day. so, here's what I mean by that, right? If you go to a bank for a business loan, you could be, 7, 8, 9% or higher. Okay. If you go for an equipment lease, right, you're probably going to be anywhere between 9 and 13%, but that's over 3 to 5 years. You know,
Yeah.
and if you get a line of credit, like I have lines of credit that start at 5.99% and go into the 20s, even the 30s, depending on credit worthiness. But then you have programs that are more expensive, right? And they're more expensive because they're just higher risk. They're easier to get. Like a merchant cash advance, people for every dollar they take out, they get paid back between $1.12 and $1, let's say 49, over 6 to 8 months. What people don't understand is you have to know how your business is going to score out, what the pros and cons are for each program, and you have to know the qualifications of your business. So what I mean by that is everybody's looking at the same thing. They're looking at time in business, credit, cash flow, industry type. Industry types kind of broken down into, how profitable are they? What type of margins do they have compared to the rest of the industry? Things along that nature. And that's going to make the difference in what programs, they're going to take. Like you can get an SBA loan right now, and they're usually between 5 and 10% interest rate, and they go out. So it really does matter what they're doing with the money, because think about it like this: if you have a restaurant, okay, and your competitor's going out of business, you can pick up all their equipment cheap. If you can pick up all their equipment cheap, basically what's going to wind up happening is you can't wait 30 or 60 days to get into some of those programs, so they take in advance. If you have time to wait, you might go SBA or equipment financing is pretty quick too. Does that make sense?
Yeah. Oh, yeah, absolutely. Yeah, it's where you're getting into like the bridge loans, the factoring and stuff. That those can be pretty brutal at the end of the day.
They can. They absolutely can, but I've seen them come in cheaper than a line of credit. And a lot of things that they work out now are that they didn't have years ago, especially if you go through the right place. Like, volume dictates everything. So if you go somewhere that does a lot of volume, they have more pull with the underwriters. They can get things done that other people can't. So usually what I say is, if somebody decides to go that route, and it's not a bad, there's a lot of times, like I don't put anyone in a program personally, and my guys don't, that it's not going to pay off, fivefold or tenfold. That's why we ask important questions up front about what they're using the money for. But, long story short, you can get prepayment incentives where they're paying a fraction of it, and MCAs, like lines of credit, sometimes get capped at 100, 200, 250, where, I have several MCAs on the table that are in the millions, a million, $1.5 million, 2 million. So it really just depends, what structure does it work for the business at that present time, and what are the other options that business owner has, but I think everybody honestly should have a line of credit. I don't care what business you own or what you do. Everybody needs a line of credit just in case.
Oh yeah. Yeah, that's huge. Especially when you're starting out and all across the board, right? I mean, different stages in business, they all have their own hurdles, they all have their own roadblocks. But at the end of the day, the more like you were saying yesterday there, the more access that you have to capital, just the smoother everything is, the easier it is.
Yeah. And a common mistake that I've seen, right? And this is pretty big, is use the money to build your business. You don't want to borrow money to have it sit in the bank.
Yeah.
And I don't care what program it is. If it's not going for growth or something that's really going to produce, either increase your margins, increase your sales, or help the business run, you shouldn't be borrowing that money. Like I've seen people come in and they're like, hey, what are you going to do with this money? Well, I'm going to park it in the bank. All right, well, it's pretty expensive to park in the bank, even at 9%. Why would you do that?
Yeah. Yeah, those are usually the ones who end up getting themselves in trouble like 2, 3 years down the road. Just they have it. Eventually they just get sick of looking at it, and then they go and shoot themselves in the foot somewhere just to try and get rid of it. Like
Exactly, exactly. So, like, I think the biggest thing is have, like, everyone should have a line of credit, but when you borrow money, when you take money, have a plan. You know, like, I know you, funnels is a very big buzzword now, but it's worth it. Like, if you can take out financing, I don't care what program it is, to get a funnel built, right? And that funnel is just, let's just say it increases your sales just 10%, right? And you take out all the money, and it covers your ad spend for the year, the cost of the marketing system or the funnel. You know, that's a huge win. That's something you don't have to worry about, and that absolutely would pay itself back, right?
oh, absolutely, yeah. Yeah, like that's huge.
Yeah,
Ultimately, we all got into business for the same thing, and that's to grow and create some sort of a lifestyle for ourselves. The
absolutely.
more
And
the
think
more that
about,
you can do to, what's that?
no, go on. I'm sorry.
The more that you can do to encourage that and foster that
Yeah,
and put that in place, it's just you're going to be better off in the long run, and not only that, but better off that much quicker.
yeah, absolutely. So, like, a big debate is, do people want to self finance? Do they want to, take equity, or do they want to take debt, right? I don't care. Like, you can consider
Mhm.
any of those programs I mentioned debt, right?
Yeah,
Yeah, and even if it's an advance, it's still debt. You're still paying it back out of the business. Um,
yeah,
but at the end of the day, let's think about it. If you self finance, it's going to take a lot longer to get where you want to be. You have to
mhm,
look at what's the opportunity cost of saving, for 3, 4, 5 months.
mhm,
If you can borrow 50,000 and have a 10% increase, and you're doing $50,000 a month, versus, if you can, save for 6 months and then deploy that $50,000. Well, guess what? You still, regardless of what that $50,000 cost, there was an opportunity cost there of about $30,000. That 50 is
yeah,
not going to cost you 30. You know what I
yeah,
mean? And you're not building
yeah,
business credit by saving. So
no,
that's a big problem. Then you look at the next, and obviously I'm a little biased, right? But
we all
then you
are.
look at, yeah, then you look at the next type of option, right? It is, you can have an equity partner, and
Yeah,
hopefully they would be buying in. Well, if they buy in for that 50,000, and now you're up 10%. Well, guess what? You're still giving away half of those gains the entire time you guys are in business. Not only
mhm,
that, but I've been, and this is a little personal, but I've had 4 partnerships or 3 partnerships that didn't work out. You have, and they could work out because your personalities clashed. They could not work out because somebody is outworking the other one, which is usually the case, and then there's
yeah,
animosity. And the whole time this is going on, it's a stressful situation, and they have half your business. So you either have to buy them out, or you're giving up half the profits.
yeah,
I think the only time partnerships work, like my current partnership, we both bring something different to the table. I'm sales, relationships. He's operations and marketing.
mhm. That works out well. Yeah, stay in your lane and don't cross over.
Exactly, exactly. I think that's a big thing. So if you have the chance to, expand and grow by using sensible debt, I would do that. I mean, I could tell you, I have my own line of credit because I sometimes I finance some clients myself, and I use that line of credit to do it. And again, you're using other people's money. You want to use other people's money every chance you get. You don't want to use your own.
Yeah, 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 that's huge, man. That goes a long
Right?
way.
Think about it.
I,
How many people are millionaires? I think in real estate creates more millionaires than any other industry, right? And nobody's saying, "Oh, I'm going to buy this multifamily with cash." I mean, I did that. I made a mistake when I was younger, but now I certainly wouldn't do that.
yeah,
You want to leverage. You want to leverage an institution, use someone else's money to get in the game.
yeah, exactly. I think that's where a lot of people end up, I guess, shooting themselves in the foot at the end of the day, is they think that if they put up the capital themselves, they're actually doing themselves a favor. They don't actually sit down and look at the math. Okay, what is the cost of borrowing versus what am I anticipating on the upside for my returns? when you do the math, like you said earlier, even if you're coming out 10, 15% ahead, you're still laughing because you can keep recycling that. You
Yeah,
can keep filtering that through to other programs, other growth, other whatever you need.
exactly. And the whole time you're building business credit, which opens up more doors and more programs and better rates.
Yeah,
You
absolutely.
know,
There's nothing
and I
worse than
think,
having an opportunity knock at your door and you can't take it because you don't have the capital.
yeah, it's true. Or you want to bring on a new product line and you think it's gonna crush it, and you can't. Like that happens. Or you want to add employees, but you know, there's so many businesses that might be, might have sales cycles that are, 30, 60, 90 days out from the completion of it. That how do you add
Hmm.
employees when you're still waiting to get paid on your last job? And then how do you
Yeah.
grow? There's no way to finance that growth. I mean, you could do invoice factoring, but a lot of people don't like that. It's a program I
Hmm.
have, but like I could tell you, most people don't use that or go that route.
Hmm. Yeah, that can open up a whole can of worms right there too. I saw
Yeah,
that all the time when I was in private equity and insurance when I had those licenses. I saw that all the time. People, I don't know why people would hit me up when I'm not even in that on that side of the industry. They'd be like, "Yeah, like
yeah,
I got this project on these deadlines, but I need this now. Like, what can you do?" I'm like, "That's not my ballpark. Sorry, buddy.
yeah,
I can make a call for you, but that's about it."
yeah, exactly. And I think some of the biggest mistakes that you see is just people don't know their business in and out. Like, think about it like
Yeah.
this: you do you watch Shark Tank?
Yeah. Oh yeah.
I mean, I love the show, but what happens if somebody doesn't know a question or know the projections, or their projections are sky high?
They get laughed off the stage.
Exactly. Well, when you're applying, like, imagine going into Shark Tank and you don't know or the financials are wrong, you
Yeah.
know, or you don't know what your cash flow is, or you don't know what your sales were for the last, call it, 6 months. You know, that stuff matters. The only difference is, credit's now factored into it when you're borrowing money.
Hmm. Yeah, I've seen that firsthand. What was it? November 3 years ago?
Uh
About
huh.
3 years ago now, yeah. I had somebody reach out to me on LinkedIn there. And the guy had retired, but the management team that he had left in charge, they
Hmm.
um they cooked the books, they weren't monitoring the books, and they pretty much drove it into the ground.
That's crazy. And
And
he was still an owner.
what's that?
He was still an owner.
Oh yeah, he was the only owner, and he reached out
Oh
to
God.
me like trying to see if I knew anybody that could finance him either privately or alternative, whatever the case is. And it's like at that point, like there's already so much damage and so much done that there's like really not much that you can do. And if you're getting a
Yeah.
loan like for something like that, like it's already too late. You're going to be paying like outrageous amounts of cash for that.
Yeah, but then you have a decision: is paying this money going to salvage, or it's going to be enough to save the business? And once the
Mm.
business is saved, does it have that positive ROI? You know,
Yeah.
an example that I always use, and this is the truth. Think about it like this: if you were walking on the street and you came across five $100 bills, all right,
Yeah.
and somebody standing there and said, "Hey, man, you could have those, but you have to light three of them on fire." Are you going to walk past them still, or are you going to pull out your lighter, light three on fire, and keep two?
Hmm. That's a good example. Yeah.
It's the truth.
Yeah.
People, like, listen, nobody wants to pay for money. Nobody wants to, have to have some interest rate or factor rate or some cost of capital. But the truth is, that's what, moves our entire society.
Mhm. Yeah. Well, and you think about it, the people who are in that business, like the lenders, they it's outrageous. There was one issuer that I was working with. They did like
Hmm.
the factoring, the bridge loans, more of the constructive financing. They would pay out any depending on the term of the bond that you got was like 6 to 8% for a year.
Uh-huh.
Yet they're making 8% every 3 months off just churning loans. Like
Yeah.
absolutely crazy.
Yeah. I mean, listen, if you're making money with it, it doesn't really matter. Think about a mortgage, right? One, if
Mhm.
you stop paying your mortgage, what do? They're going to foreclose on the house. It's going to be up for sale. However, you make your payments on time, and now lenders have to disclose this. Like if you borrow $500,000, you're going to pay back 1.2, 1.3.
Mhm.
You
Yeah.
know what I mean? So, we could talk about how expensive money is, and there's truth to that. But if I buy that same property, right, borrow it, and I know I'm paying 1.3, well, if it's producing a positive return on investment, let's just say I decide to rent it out, and I'm bringing
Mhm.
in I'm bringing in $2,000 a month over the mortgage, or $1,000 a month over the mortgage, you know,
Mhm.
um,
It's
after
worth
it's all
it.
said and done, think about it like this: it's 360 payments times 1,000, right? You're looking at, you made $360,000 over the course of that mortgage, okay? And not only did you make that, now your mortgage is paid off. So yeah, you
Mhm.
paid a lot for that money. You paid a lot to borrow it, and I'm talking that's like at 4%. But business
Yeah.
lending works the same exact way,
Yeah.
which is why it matters how much, what you're going to be able to make with the money.
Yeah. Yeah.
And
It's
again,
all about the upside and what you can do.
yeah, that's why you don't sit on it, right?
Yeah. Oh, exactly. That used to drove me crazy in 2008, 2009, when everybody's like, "Yeah, I just cashed everything out and I'm just sitting on it now. It's gonna go
Yeah.
under my mattress." It's like,
Which,
but
which was the best time ever to buy, right? Like you couldn't have had a
yeah,
better time to buy anything.
yeah. I'm like, so you're telling me you'd rather lose 3% a year, whatever inflation is, say 3% a year. You'd rather lose that by sitting on
Yeah.
cash as
Yep.
opposed to even if you're making 4 or 5% right now, who cares? Because that's gonna
Yep.
go up.
100%. But when you're in business, though, the businesses have higher margins. Think about it like this.
Absolutely.
One, it's riskier to lend to a business, right? Because
Oh
most
yeah.
of the time it's not really secured by anything. So that's why they're paying a higher cost. Somebody comes in and they want some type of business financing. What's the first thing they compare that to? They compare it to a mortgage, right? But it can't
Yeah.
be compared to a mortgage because a mortgage is secured by a house, and you're putting anywhere between 3.5 to up to 20% down. If it's, one, you have really bad credit, or two, it's an
Mhm.
investment grade property, right?
Yeah.
So that's number one. Number two, you have higher margins in business. So, you know, if you're borrowing money for inventory, I don't think anybody sells inventory at less than 20 or 30%. Maybe some people have 10%, but you got to think about how quickly
Mhm.
that recycles. Even on the worst
Yeah.
terms, if you're on a 6-month program and you're using it for inventory, but you're recycling that inventory every single month, right? You're buying it and you're selling it. At the end of that 6-month period, you're still up 60%. If they have
Yeah.
$100,000 and they borrowed $100,000, they still made 60, right? And if that cost them 30, they're still up, $30,000 that they wouldn't have been.
Yeah. It's a no-brainer at the end of the day, really.
You know. But a lot of times, people get confused with how money works, or, a big thing that we see, people don't understand their credit and what's on there. Like, if you go,
Mhm.
do you monitor your credit?
Yeah.
What do you use?
I check. What do I use? I just you log right into Equifax.
Okay, so that's an accurate score, right? Everyone likes to go on Credit Karma, where they're like
Yeah.
40, 50, 60 points higher. you
Yeah.
know if you go to like Credit Check Total, or like you said, like log right in, you're going to get a more realistic score. The other thing people don't understand is each bureau has several different models. Each model will
Yeah.
pull a different score. So there's like Experian 9, Experian 2, and they could vary by 20, 30 points.
Mhm. Yeah.
you know
That doesn't help you at all.
No, no. And then another big mistake that people make when, because we're talking about financing your business efficiently. If you go to the wrong place, right? So let's tie in funnels to this, right? if you opt into a funnel and that funnel is just selling leads, it's not to a marketplace, 3 or 4 people could pick that up. Maybe if you're lucky, one's a marketplace like Sprout, okay, where you're not going to get your credit run a million times. But if you go to the wrong broker or someone who doesn't know what they're doing, they could ship that out everywhere to every single lender. And then every time they ship it out, it might not even fit in that underwriter in that lender's box. And it's going to be an auto decline for an industry or something like that. Well, now what happens? You went from a 680 to a 580 because you went to the wrong place. You know?
Yeah.
Which is why you have to vet people out a little bit. You know, I've seen it time and time again.
I saw that often when I was in cars, when I was in the car biz. They'd pass it to like every single lender they had to see where they could get the best rate, and it's like.
But nobody asked, right? Were you in cars? You were in car sales, right?
Yeah, I was for a year and a half. I hated it.
Yeah, of course. You seem like a good guy. I don't see you liking it. You know, but think about it. Did anybody ever ask you, like, hey, how many lenders are you going to send this out to?
No. It works a little bit different up here. Like finance and sales was totally separate. We just throw them in the box after they picked out their car, and the box dealt with it once we had the terms. But like nobody ever asked. And then the finance department would say, yeah, don't worry about it. Just tell them it only counts as one hit. Who cares that we ran it 20 times?
Yeah, no, that's not true.
No.
You know, one of the things that we try to do is have them pull a credit score up front, because if we pull internally, it's a hard pull, you know?
Yeah.
And then what you have to know is, like, you have to analyze their cash flow, their credit, if they have any outstanding debts or balances, right? You have to analyze that, think of the industry that it is, and then you got to find the right lender before sending it there, okay? Or the right underwriter before sending it there. And then you need to know who has a hard pull and who has a soft pull. You know, I like to use underwriters that have soft pulls versus hard pulls, because I don't ever want somebody to come back and say, hey, I had a horrible experience getting the financing.
Yeah.
You know, this day and age, you
Yeah.
got to treat your clients like gold. You know, you're
Absolutely.
you're in the funnel game, right?
Yep. We're all commoditized.
Exactly. And if somebody says they have a bad experience with you, you know, it's very easy to lose a reputation. It takes a long time to earn one.
Yeah. Yeah, it can be a struggle sometimes. It was the same when I was in finance. It's pretty much like that in almost any industry that you're in these days. Just there's so many people in any given area that we're all commodities now. It's not hard to cross the street and talk to somebody else if you really want it.
Yeah, it's true. Well, if you think about it, you say cross the street, it's literally scroll the page now.
Yeah.
You know?
Yeah, exactly.
Just scroll the page, and then you don't know like who's doing what. And there's people that advertise their lenders in this space. They're not lenders. You know, it's just it's a crazy time to be alive based on, you know, technology. And, you know, I think technology can bring out the best in people. I also think it can bring out the worst in people.
Yeah.
Here's that.
Yeah, I went through that when I started getting into funnels at the beginning of the year. Like when I joined Ryan's program there, the funnel closer one, I remember it took me a while to find an actual team that I felt comfortable working with and stuff. I'm pretty glad that I ended up with Todd and those guys now, like, because we're kicking ass, taking names all over the place. But
Yep.
I mean that first little bit, that was just headaches trying to figure out who was who and where everybody's skill sets lie and everything like that.
Exactly. Who's real, who's not. Like Todd's a great guy, you know. You know, it's funny, everyone talks about funnels. Like my partner was doing funnels in 2004. They just weren't called funnels. You know?
Yeah.
So and generating leads for this space. Have you generated small business financing leads?
No.
Super expensive.
I bet. Yeah, there's a lot of competition.
Yeah, for qualified leads, because we're going up against, you know, some of the lenders themselves, and you're talking, you know, people that have budgets of $500,000 a month.
Yeah. I know there was I got a referral up here. It didn't go too far once they found out that we were charging American. But they're a local company up here in Calgary. They wanted to try and like tackle the Ritchie brothers, try and like imitate their system. Nice thing about Todd is
Yeah.
Todd knows that stuff. He can like help design that out, but
Oh,
it's
in
like
and out.
that's not very realistic when you're just like the small kid on the block
Yeah.
and you're trying to go after a global institution and take their market share.
Yeah.
Doesn't work. They could silence you just like that.
Yeah. It's true. They can just outspend you. For
Yeah.
us, I think having transparency when we work with our clients and in lending, it's crucial. And I see the same out of Todd and your whole group, which is great.
Yeah. That's it's not hard to set yourself apart from the rest of the people, but
Oh,
like setting yourself apart's the easy part. It's keeping yourself there.
yeah.
That's where the challenge is because it's like you said, like it takes forever to build a reputation, and all it takes is one little thing, and that'll just come crashing down.
Yeah.
I've
Like one,
seen
one of
it
one of
time
the
and
big
time again.
yeah, one of the big things is when I started, I only worked for MCA companies. You know what I
Mm.
mean? And you just don't know what else is out there, which is why I created Sprout, because so many clients would have been better served and I just didn't know. And I'm talking
Yeah.
5, 6 years ago. I had no idea, you know, excuse me.
Bless you.
I had no idea, thank you, that equipment financing was the solution in certain cases. Lines of credit, term loans, SBA loans. So
Hmm.
that's I think one big thing that you would get going to a marketplace like us versus going to a bank, because they can't offer you everything. If your credit's bad, you're not getting it. If you need it quick, that's not
Hmm.
happening. They don't have equipment financing. Um,
Yeah.
you just want options. People want options and they want convenience.
Yeah.
You
It
know?
was the same thing when I was in insurance. I started off as a broker. I went captive and I hated it. I was like, I couldn't
Yeah.
believe it. I'm like, I know there's better solutions out there. And
Yeah.
ethically, what happens? I tell them to go talk to like somebody who's independent like I was that I trust. And then
Yeah.
I have the agency coming down on me for sending them away. Or I give them a product that I know isn't necessarily best suited for them. Like
Yep.
that didn't
It's
last long.
crazy. You're right. I'm in the same boat right now. State Farm, I've been with for probably 8 years. I'm getting charged an arm and a leg. I just don't have the time to actually go in there and switch. But when I do get that time, maybe in like 2 or 3 years, I'm going to do that.
Yeah.
That's why I love being independent and having different solutions, because you really can do the right thing by people. And at the end of the day, if you do the right thing, it's easier to sleep at night, and you feel good about what you do. Like when I help a business owner get financing that either one, they couldn't get, or two, they really needed to grow. And then I see that same client come back, in 6 months, and
Mhm.
his business is up $20,000 a month. That makes me feel great. I know I did my job,
Yeah.
I'm sure it's the
Yeah.
same with you and funnels.
Absolutely. Yeah. It's a great feeling to see the results and see the way that things just snowball. The
Yeah.
beginning can be a little bit of a headache, and I get it. Like it's the anticipation of getting everything set up, getting it rolling, and figuring out all the little details. Like that can be frustrating for everybody, but once it starts taking
Yeah.
off, it's more than worth it.
Yeah. So, we talked a good amount about lending, definitely a good amount about, what we do collectively. What questions do you have for me about lending, or business finance in general? The tougher, the better.
I don't really have too many. Like I know from my background in the industry, I don't know all the in and outs. Like I'm nowhere by any means, but I
Hmm.
know enough to sort of be dangerous. Like
Got you.
the biggest thing is the biggest thing for me is like strategizing. Like especially like
Yeah.
people come to us in the funnel game, in the marketing and
Yeah.
advertising game, going, how do we grow? How do we scale? And the capital isn't always there. Whereas
Yeah.
you can bring in insurance agents to help with strategies. You can bring in lenders to help with strategies. Like there's just so many different options that like working with the client to figure out what they need is really the
Yeah,
biggest hurdle because they don't track their shit like they should more often than
yeah.
not.
Well, what people don't understand is like, let's talk about some advantages between certain programs, right? So, if you use your personal financing to finance business stuff, which I see a lot of, okay, a
Mm,
whole lot,
that's common.
personal cards and other stuff. Well, guess what? Now because you have taken out, increased your debt to income ratio, what winds up happening is your credit score goes down. Okay.
Hmm.
And it's not a true, it's a little bit harder to write it off. Whereas, everyone talks about how bad, or how expensive MCA programs are. But if they take an MCA program, it doesn't get reported on their credit, okay, which is a huge advantage. They're building, depending on what program, they're building business credit. And if they
Hmm.
were to pay off those credit cards that they've been financing the business with, their credit goes up and then they can get a line of credit. So it's almost like you can use debt sometimes to uh, basically really not just grow your business, but increase your credit and
Hmm.
get yourself into better situations where you qualify for better types of programs.
Absolutely, yeah. There is a huge difference between good debt and bad debt.
Yes.
And it's the differentiator all comes down to how you're going to use it when you have it.
Yep. You know, that's true. It's also, you know, you always want to have some level of debt because I've believe it or not, even today, I see businesses that are all cash, and all it takes
Yeah.
is one mistake. See, you guys are all seeing my office, a lot of green, got the logo. I know they put that on the Instagram all the time. Um, we see businesses that are all cash. The challenge is that when you have an all cash business, something goes wrong. You have no credit, and it's very, very tough
Yeah.
to get what you want. And then people are like, well, why are the rates so expensive? Well, you've never borrowed before. You haven't proven that you can pay, back. There's no level of credit here. This is kind of
Yeah.
where it's at, what it is. But I will tell you this: when I first started, I started about I think 2008 or 2009. The
Yeah.
programs have morphed night and day. So like when we
Oh yeah.
back then there was really only one or two options. Those options were if you were taking an advance, it was going to be like a 6 or 7 month term, and it was going to be only based off credit card sales. And for every
Hmm.
dollar you were taking, you were going to pay back between $1.38 and $1.45. There were no prepayment incentives. Now they'll go out
Hmm.
18 months, almost up to 2 years, and the rates are more reasonable. There's prepayment incentives. There's daily and weekly options. You know,
Hmm.
banks are starting to open up a little bit. What I mean by that is, you can get SBA loans, you can get term loans. People are issuing lines of credit, and it's just a better overall business atmosphere in terms of financing.
Yeah, absolutely. I know there's people that keep coming on and off, but if you guys have questions and you're on here, like ask away.
Yeah,
That's what we're here
please.
for. I don't, Patrick might have
I
some.
Patrick, you got any questions? Or Zach or Robert? Man, I would love some questions.
I'm trying to
I
think of what I'm trying to think of what people would ask or what people would want to know. That's what I was trying to do yesterday too. Like that would be a good one to go over. Like when's the best time to start? Like when is it appropriate to start implementing a term solution versus a revolving solution? Like his credit cards aren't necessarily the
that's
best revolving solution.
No, no, not at all. Well, here's a difference. Like, there's one caveat to that. Okay, I'm I'm in the process. Besides the line of credit for my business, I want an American Express business card. The reason I want that so badly is I know that whatever my monthly charges are, I mean, I it's probably $20,000 or $30,000 a month, and we pay that regardless every month. It comes out of the bank. So if I put that on a business credit card where I can
Yeah.
accumulate points and miles and I know I'm paying it off at the end of the month, that's fine. Like that's
Yeah.
neither here nor there. Just don't let it snowball, right? Like
Yeah.
that's the biggest thing. But to answer your question, when do you want revolving credit, like a line of credit or an MCA versus a term? And if you break down the numbers with what the overall cost is over the period of time, they're all very similar. Okay, I had a slide. I don't know where it is right now. I'd have to go through my computer, and I don't want to do that for the purpose of this video.
No worries.
But the cost is within 20% of each other on each, for the most part. Okay, so the question is, how often are you going to have to buy that or have that need? And the answer is, like, if you're adding employees, you may add employees every 3 to 6 months. So that line should be accessible every 3 to 6 months. So it should be that's a shorter term need. A piece of equipment, right? If you own a repair shop, an auto repair shop, you're not going to buy that. You're not buying the same piece of equipment every month. And if you are, you probably have to talk to the manufacturer. There's a problem there, right?
Yeah.
So, financing that over 3 to 5 years in monthly payments makes a lot more sense.
Yeah.
Marketing costs. Think about it. Do you market once? Do you ever say, "Hey, I'm going to build you a funnel, and you're going to spend $5,000 or $10,000 this month and never run it again"?
Nope. That's a suicide mission.
Exactly. So for that, you would want something revolving, either an advance or a line of credit. Because it's shorter term. So you're going to be paying it off as it's running, and then you can tap back into it.
Yeah, exactly. Yeah, being able to wash, rinse, repeat, that's the biggest thing. And it drives me crazy when people come to us and they're like, yeah, like, can I just like work with you for a month, or can you just build me a page and let me run with it? It's like, no, we're committing, we're doing Harry Carey if we're doing that for you. Like, there's too many moving components. You need to make sure that everything is working well together.
Yeah. Well, think about it like this. You have to optimize what you're doing.
Yeah.
Absolutely. Optimization, how long does that take you? A while.
It could take 3 to 6 months depending on all the factors: where you're located, your competition, what's going on, who you're targeting, are you B2B, B2C, like there's every little thing makes a difference in how long, especially if you're working with a cold audience. If we're having to build something for somebody that's off of just a strict cold, that's going to take a while because there's no data, there's nothing there. Having a database where we can run off of and create lookalikes, that speeds up the process, makes a big difference. But it's the same thing, like that. Those scenarios apply to loans just as much as it applies to marketing, as it applies to insuring your business. It's the same concept. You're just applying it in a different arena.
Exactly. So in that case, they need something that's revolving. When, like, it's very hard to start a business without capital, or bootstrap it, if you will. There's programs for that. Like, people that have 670 credit, right? There is what we call a fresh start program. And it's basically what it is my team knows the algorithms with the banks, like who's going to approve what and who's going to give you the max. And they'll put you in for business cards, personal cards. They're basically lines, like credit cards. But you can liquidate the entire thing at 0% for a year, and then whatever APR you qualify for after this, they charge 10% of whatever it is. But the point is, that gives you enough runway and enough capital to get started and then start producing in positive ROI. And then after 6 months, they can get into another financing program to pay that down or pay that off or put it back into their business. Does that make sense?
Yeah, absolutely. That makes huge sense. I'll throw Julie under the bus right now because she's here. She was just talking to me the other day about how there's technology and infrastructure she wants to implement on the back end and like hire a team and do all these things, like has all these plans with her business. That right there is a perfect situation for something that's revolving, because that's going to be huge cash injections over and over and over again, or minimal over and over and over again, that are just going to keep snowballing.
Exactly. And what people don't realize, like, a lot of people have unrealistic expectations when they come in and apply. So somebody
Yeah.
that's doing $50,000 a month and they can't get a term or an SBA, they're going to be, whether it's a line of credit or a cash advance, it's going to be a revolving line. So that's based off their revenues at that current point.
Yeah.
So they might have an ask of 150,000, and we tell them right away, hey, that's probably not all that realistic because this is why you don't
Yeah.
qualify. And if that's the case, what we do is we get it to them in stages. All right, we'll give you 50,000 up front. As you pay it back, once we see sales grow, there's more revenue to lend off of, right?
Mm.
And then from there, you know, the line will raise, and then you can do another project in another stage and work your way up. And the
Yeah.
cool thing about what we try and do, and one of our core principles is we want our customers around for life. And if somebody comes to us and they can only qualify for an advance, and it might not even be a high-end advance, it might be a low-end advance, we work with them to get them into the next best program. Like we give them a blueprint, right?
Yeah.
So if their credit was bad, I'll send them, do you know Billy Alt? I send them, all of them, to Billy Alt. He's one of the only guys that does the right job.
Yeah.
You know? And so I'll send them over to Billy Alt. He fixes their credit, and then in 4 months, when their credit's higher, we get them into a better program. And then if it's a cash flow problem, you know, we tell them, listen, you got to keep $2-3 grand in the account at all times, because some people don't know that, right? Because a bank wants to see what's their average daily balances, how many deposits, you know.
Yeah.
And if we can get them to fix that, well, next time maybe they go from an advance that's a little bit more on the expensive side to a line of credit. And then maybe they go from a line of credit to an SBA or a term loan.
Yeah, stepping stones. That's huge.
Yeah. You know, the way did you go to college?
No, I don't think I ever would.
Well, I actually said that on a post today. I went to the University of Stony Brook. It's a great school. But
Yeah.
it was a waste. It taught me how to drink and take tests, you know?
Yeah.
But if you think, I learned more in these programs that we all buy, you know, like I learned more in Push to Excellence than I did in college. But long story short, you know, when I was in college, a big thing that was going around was Citi was giving out credit cards to college kids. And it was a $500 limit. It was preloaded just to build credit. Sometimes business financing works like that too. You know, people come in and want 50 grand, but they only qualify for 10. Well, use the 10, pay it off, establish credit, establish a relationship, and then we'll work with you to get into higher programs. And as you go up that ladder, they'll give you more money, they give you a longer term, and they give you better rates. Like there's lower cost because you're not as risky. Your risk score goes down, essentially.
Yeah. Yeah, and that's a huge point. That's a good point too, is just because you don't get what you want when you want doesn't mean that all is lost. Like there's nothing more wrong with implementing things in stages or phases and building up to where you want to be.
Yeah, no, I'm sorry, go on.
If it takes a little bit of extra time, a couple months, a year, it's no big deal. The fact of the matter is you're getting there. Whereas if you decide to give up and wait an extra 6 months, well, now you just set yourself back double, triple, quadruple the time.
Yeah, and you're right. That's the opportunity cost that we discussed earlier.
Yeah.
Another big factor in this, and you know, I want to elaborate on this because it's a common myth, right? Like I said earlier, people want convenience and they want speed, but there's companies out there like Cabbage, right? I'm sure you heard of them or you've seen their ads, like Loan Builder. And the problem is when you go to a company like that, they don't have the other programs for you, right? So if they don't have those programs, all you're basically sticking yourself with one type of financing line, and that's it. And there's no ability to grow from that. You'd have to go shopping again. You don't know where you're going to go shopping. You don't have any relationship established. The other thing is, get a I'll tell you right now, go to Cabbage or what's the other one? There's one other one that's similar, maybe Funbox, and call their customer service line. See how long it takes you to get a resolution or even to get somebody on the phone.
Yeah.
You know, so that's why you want to work with professionals. Like, you know, again, you know this because there's so many different people selling funnels. and there's nothing wrong with that. It actually creates a lot of options for entrepreneurs. But what happens if they go to the wrong guy?
Yeah. It just puts them off.
It puts them off, and then how do you come back to that? You know, hey, I'm sorry you had a bad experience, but you know, that wasn't me.
Yeah. My favorite analogy is riding a bike. That's usually my go-to is when you're learning when you're young and you're learning how to ride a bike, you fall off, you scrape your knee, you have bad experiences, it happens. It doesn't matter whether it's funnels, loans, insurance, starting a business, being an entrepreneur, being a realtor. It's all relative. You start getting in the workforce. Maybe you had shit luck your first two, three jobs,
Yeah.
but it's something that you need to do, and it's something that you can't avoid. So are you going to let one or two bad experiences put you off for the rest of your life? Or are you going to live and keep trying until something works?
Yeah, 100%, man. I will probably use that because I like it so much. So
Yeah,
thank you.
absolutely. Hey man,
You
none
know,
of my ideas are my own. I took them all from other people.
you know, I one of the things I always say is I'm never the smartest guy in the room. I'm just too stupid to quit, and I just finally, found ways to make everything work.
Yeah.
But that's the difference. Like if you have somebody that cares about your business and pushing for you and is going to champion on your behalf, battling the underwriters. Nobody wants to fight an underwriter. They're pinheads. I'm
Yeah.
sorry if any of my underwriters are watching, but you are pinheads. Like there's no denying that. Okay. It's true, man. Sometimes I want to lock them in cages and poke them with sticks.
For sure.
But no, you have no idea. Like the stuff I deal with, and the clients have no idea, right? So that's one of the funniest things about what I do. Like if you go to a bank, they just come back to you. Oh, you're declined.
Yeah.
I don't do that. I give them reasons. Like if I can't help somebody, I tell them, hey, this is why you were declined. This is what we have to focus on. This is how you do it. This is where you have to go.
Mhm.
You know what I mean? Versus a bank, oh, sorry, doesn't work. Doesn't fit our box.
Yeah. It was the same in insurance dealing with the underwriters over there.
Yeah, was it bad?
Oh yeah, there were some pretty big headaches over there.
Like give me an example of like a headache that you would deal with that
It's well, because insurance all health related. Like maybe they went and saw the doctor 5 years ago for something that they didn't know about,
yeah.
or one of their parents. There's like some family history, like in a parent or a grandparent that they didn't know about for whatever reason, and now that's coming back and biting them in the ass. Um, One big one was depression. Like this one lady, she had depression. She'd been on meds forever, but for whatever reason, the underwriter was having a bad day or something. Is like, yeah, well, we just don't like you because you're taking pills, and we want to see something change for that. So see you
So you're
later.
doing something to help the problem, right? I don't want to say problem, but you're doing something to remedy the challenge, and we don't like that.
Yeah. Yeah, when I applied for my own life insurance for my UL, the carrier that I went with declined me, didn't tell me why. A few
Yeah.
years later, I applied again. They're like, "Yeah, there's something on your medical report about like potential liver and kidney failure." I'm like, "My doctor has never once, like my doctor's surprised I'm healthy every single time I go in. He can't believe how healthy I am. He's never seen
Yeah.
anybody healthier." So like it's really that applies to loans, just different situations, right? There could be a blemish on the credit that somebody's
Yeah.
not thinking about or trying to hide or
Yep.
whatever the case may be, right?
So, like, I'll give you an example. I have a guy now. Some of the things on his credit report are less than flattering, but he has explanations for them. Okay,
Yeah.
and because he has explanations, and I believe the guy. I'm a people person. If you tell me a story, and it makes sense to me,
Mhm.
I'm gonna fight for you. As long as you're not lying to me. I always tell my client, listen, I will do
Yeah.
you are my client. The underwriter is not my client. I will do everything I can in my power to help you. But you have
Yes.
to tell me the truth. This guy, the bank was being difficult, and he's saying he's late on a HELOC and late on some other stuff. I was still able to get him almost $500,000. He
Mhm.
goes to a bank. There's no way he's getting approved. You know, now I got an
Yeah.
underwriter saying, oh, I want to talk to his accountant because I need to figure out what the financials say. Well, no, you don't. Like, I'll find
Mhm.
out. Like, I'll get the explanation. You know,
Yeah.
and where if these guys applied, they have to deal with all this crap, and they don't know what the underwriter's looking at. I was an underwriter, so I could be like, hey,
Mhm.
you know, and I, by the way, I hated it. Fucking hate. Excuse me, hated it. Right. So, you know, like I know how to deal with it and how to, you know, what to ask and what to find out. If you're doing
Yeah.
this by yourself, you'll feel lost, you'll feel trapped, you'll feel aggravated. So
Mm.
it really does make all the difference in the world. And I can tell you, there's probably and I'm not kidding, this is not an exaggeration, probably about 10 applications a day I have to make a phone call to an underwriter or the owner of a company. The thing is, like, for me, it's a very, very relationship driven business. I know that sounds weird, but
Mhm.
if I have an issue with an underwriter, I'll call the owner of the company. I'll call the CEO. You know, I give
Yeah.
them enough business. I don't have to take you know, somebody that's been doing this 2 or 3 years when I've been doing it 12 years. You know,
Mhm.
I'm not going to take their word for it, or I'm not going to deal with, you know, the backlash. I'll be like, listen, these are the strong points. These are what the guy needs to work on. We're going to work on him with it. You know, let's get X, Y, and Z. And I'll just tell them these are the terms I think work. Because in my
Yeah.
industry, hey, what's up, Peter? You got to think about it.
What's
It's
going
a
on,
double
Pete?
sell. You
Yeah.
know, it's a double sell. The client has to like the terms, and the underwriter has to agree to the terms. There's a
Mm.
lot of different factors that play into that. So it's not all that easy. Everyone's like, oh, you're selling money. It's the easiest thing in the world. Everybody wants money. There's
No.
truth to that. Everybody does want money, but they don't understand there's those connections to be made. And
Yeah.
I'll go one further that people don't know, and I probably shouldn't be saying on a Facebook Live, but I will. Fuck it. Sorry. You know, this is getting entertaining. When you think about it, like, I've had people that have submitted business to me, and because of my relationships and how much volume I've done, I was able to get one client 300,000. That same client went to the same underwriter through a broker and only got 200,000.
Huh.
Okay, and it's just based on relationship. And I know you're like, how
Yeah.
could that happen? Well, it happens all the time because they know that my clients perform at a certain level, right?
Mm.
It's part of the risk score, you know, because
Yeah.
there's people that don't do the right thing in this space, and they tell people, oh, well, this is how you game the system, instead of actually
Mm.
working with them. So
Yeah.
that matters. Also, I can sell, like, I have access to programs and what they call it buy rates that are cheaper than most people because of volume.
Mm.
And because I have it, like, I consult for a lot of the lenders. So the fact that I can do that, you know, gives me an advantage over my competition and gives my clients an advantage because it's a waterfall. If I'm getting this, then I'm going to pass that on to my clients, and they're going to be in a better situation.
For sure. Yeah, it goes a long way. A lot of people underestimate that aspect, that component, the relationship component.
Yeah.
As
And doing the
at the
right
end
thing.
of, well, exactly. And like at the end of the day, you more often than not, the best way to play the system is to play by the rules.
You know, I'll tell you, there's somebody that was on here, Matt Meehan. I don't think he's still on here. If he's on here, give me a shout. But me and him, like, we met through, I think, Sales Talk, and we have a great relationship. You know, I help him with deals at a certain lender, and we go back and forth, like my company and his company, because we
Yeah.
both specialize in different things. And you know, uh, most people would say we're competitors, but we're really not. We help each other, you
Mm.
know, and it's having the right relationships and doing the right thing, because most people don't. And you're never going to get those relationships without doing the right thing,
Yeah,
you
absolutely. That
know?
goes a long way.
Yeah. And what people have to understand is you're not doing, like, if they come to a marketplace, we're doing the shopping for you. You know, if
Yeah.
you shop us against somebody else, you're only hurting your chances of getting into a good program, not increasing them.
Mm.
You know, because they might not be telling you the truth. They might be running your credit 50 times. You know, they might be sticking fees in that don't belong. You know, when
Mm.
you do volume, you don't have to do those things.
Yeah. Well, and the other caveat to that too, to shopping around, is it's the money world. It seems big, but it's small. How many,
Yeah,
if you're dropping three people against each other, how much crossover is there between the
oh,
lenders that they're
tons,
approaching? Like,
tons. You're right. You know what? That is a great point. There is so much crossover. You
yeah,
know, like
you're
when
just,
I consult for the lenders, there's people I'm like, oh, I've seen that before. I've probably seen it about 8 or 9 times. You know, and it's the
yeah,
same application. And I could have saw it in 2010. I have a photogenic memory, so I can remember things like that. And it's
nice.
crazy. It's just so much. You know, there's so much of that. It's funny. You're right.
Yeah. I always got a kick out of that, man. Especially when people were shopping with people that were in my brokerage, like in the same MGA as me. It's like, really, we have access to all the same stuff. You're not gonna get a different answer here.
Yeah. Yeah, and like one of the cool things that we do is like when we get terms, like we have multiple terms. So I'll say, hey, these are the options I think we can get you because
Mm,
it's never done until the money's in their account. So
yeah,
even though it's pre-approved, right? People don't understand that that's just like a score based on what they see now, not
yeah.
what can be. So I always make sure I get feedback from the client. If that works, great. If not, then I have to go to bat for them and try and get an underwriter to lower the rate or increase the term or increase the amount. And if I can get that done, I make sure that that guy commits to it. And then from there, you know, I work with that underwriter to get the file signed off. And then hopefully, most times at this point it does, but hopefully everything checks out and there's no issues with the business. Like issues that come up all the time is their account's negative. You can't fund into a negative bank account. Or they haven't paid the landlord. Like nobody tells the landlord, hey, you know, this guy's borrowing money. But on the flip side, they're gonna call the landlord and say, hey, is he in an active and current lease? We're gonna give him some equipment. You know what I
Yeah,
mean? And if you're not paying your landlord, you're probably 2 weeks away, you know, 2 months away at most from getting kicked out of the business, you know, kicked out of the
yeah,
location. So those are just things that come up that people don't realize that we deal with, and we deal with it every single day.
yeah. There's a lot of dynamics to it. The pre-approval, you're not even looking under the hood to see what's going on. You're just looking at the surface.
Yeah, that's it. You're looking at, like I said, credit, cash flow, time of business. But when they dig deeper, like people don't dig deeper into financials until there's a signed agreement. You know, if
Yeah,
something's off, they're gonna find that, and then you have to be able to explain that. And if you can't explain it, it's gonna be a problem. You know, it's gonna be tough to get it done.
mhm.
So
The easiest way. Sorry, what?
no, you go.
The easiest way to get around it is just by putting it all on the table. Clients would save themselves so much headaches, so much hassles if it's just like, hey, here's what I know, here's the situation for what it is, pick something. Like, which way do
Yeah,
I need to go? What do I need to do? Makes a
a
huge
lot of
difference.
times people don't like that. People don't like making a decision. You know what I
Don't
mean?
look under my skirt.
Yeah. You know what I tell people is like everyone wants to know what the rate is. And I tell people, like, I'm going to get you into the best program you qualify for. It's not bullshit. But you don't
Yeah.
call up your mechanic and say, hey, my car's making clunk, 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 clunk noise. How much is that going to cost to fix? You know,
Yeah.
like, you got to pull up the hood, right, and see what's good. The mechanic has to pull up the hood and see what's going on there to actually give you an assessment. It's the same thing in business lending. So
Yeah.
if people are quoting a rate, that scares me because it's probably not an accurate representation of what they're going to deliver. And now
Mhm.
you're going to have a bad taste in your mouth because somebody promised you something that they can't do.
Yeah. And they're going to hold everybody else that they talk to that standard of that empty promise.
Yep. And that's just another thing that we deal with. You know, it's hey, it's you know what, it's par for the course. At this point, I'm
Yeah,
used
yeah.
to it. I try to educate. Like my biggest thing is, I don't want to sell anybody. I want to educate them and advise them and counsel them to help their business grow. Because you know, think about it. Like if you did business with me, I helped your business grow. How many people are you going to refer me to?
Anybody who needs help in that lane.
Exactly. You know, and I pay big referral fees too, because you know what? I rather work with people that know people I've worked with in the past,
Yeah.
because it's an easier transaction because they'll open up to me, they'll be honest with me, which makes my
Mhm.
job that much easier.
Yeah. It's the same thing as running people's marketing and marketing to like a warm audience or somebody with an established database. It's the same thing. It's just everything is just easier for everybody.
Yeah.
You don't want to be like me and missing all your hair because of frustrations one day.
Oh, I'm close, man. It's getting there. It's getting there. This is the best hair money could buy at when I was 20 or 22.
Where's Matt? We gotta bug him about that.
What, Matt?
What is it?
Matt
Matt
who?
Smith? Whoever keeps going on about having the best hair in all of our
Oh,
groups.
yeah, yeah, Matt Smith, yes. Listen, he's got a great head of hair, man. Fiery red hair. I love Matt. Matt's a good guy,
He's
you
awesome,
know?
yeah.
Yeah, he's funny. Oh, well, my battery is getting a little low. Let me plug this thing in.
No
Um,
worries. We're like way over time too, so
are we?
we can
All
jet
right.
here.
Well, I hope this was good. I enjoyed this. I'll come on anytime. I'll invite you to speak to some business groups. Is there any other questions before we wrap up, either from the people watching or from you?
I can't think anything off the top of my head, but anybody who's watching this, like now we're down the line, let us know. Reach out to us. We're here to help. Like if you have a question, post it here. If you don't want to post it here, hit us up in the private messages. Like, um, I'm surprised how many people aren't comfortable commenting where a bunch of people can see and they just go right to the direct messages and say, "Hey, here's a question."
Yeah,
Like, it's pretty cool, but it's nice to know that people are watching and we're able to help, whether it's now or down the road.
absolutely, man. So, hey, I appreciate you having me. I look forward to this in the groups, and I hope we can both help people out of this, because that's what it's about, helping people. And again, thank you for having me.
Yeah, for sure, man. Thanks for coming on. It was a pleasure. We'll chat soon. Cheers.
Take care.